Good afternoon. Welcome to Trading the Close on this Tuesday. I'm Toni Valliere with Verified Investing. And here's what's making headlines today. Fed Chair Jerome Powell says the U.S. economy has not seen inflation come back to the central bank's goal, which makes interest rate cuts anytime soon unlikely. AMC stock soars over 14%, putting the stock on pace for its biggest daily percentage gain since August of 2023. Pretty significant considering the turmoil over the last few years. And former President Donald Trump's Truth Social lays out a plan to launch a live TV streaming network, creating a short-lived bounce in the stock. Also, Tesla shares fell after job cuts were announced on Monday. Tesla says it will lay off more than 10% of its workforce. Some of the big market movers today include United Health, DJT, and Bank of America. Let's get a check of where things stand right now. Just minutes before the closing bell, we are seeing more green today. The Dow up 69 points, 0.18%. The NASDAQ is up 8 points, 0.05%. The S&P 500 down just 9 points, 0.18%. We've got oil down slightly, gold up over $6, and then Bitcoin down over $600. So my special guest today has more than 50 years of trading experience with stocks, options, and futures, and is a cycle analyst. Steve Miller, aka Slim, started his career in Chicago in 1974, trading options, futures, and equities as a floor trader. Well, today, with a team of his own, he provides coaching and education to other traders through his firm, Ask Slim. So, Steve Miller, thank you so much for joining me today. Welcome to Trading the Close.
Hi, Tony. Very glad to be here with you today.
You have an incredible background, and before we get into your story, I'd like to have you recap today's trading. I know you do read the charts, so can we start with the S&P 500? Tell me what you look for when you analyze the charts, because I've learned that everyone reads them just a bit differently.
Sure. Would you like to see the chart right now, or should I just talk about it?
Yeah, no, go ahead and bring it up, please. That'd be great.
Okay, good. I'll share my screen here, and you can see.
As you're bringing them up, I do want to make sure that people understand the Ask Slim, where that came from. It's your initials, right?
Yes, my initials are SLM. When I became a trader on the floor of the CBOE on May 20th, 1974, so that would be just 4 days from my 50-year anniversary, my first trade that I made in the pit, and I was trading in the Ford and IBM options pit. I made a trade with somebody, and he looked at my badge, and my badge said SLM, and he said, Slim. Well, that was it. It stuck with me for 50 years. My wife calls me Slim. My grandkids call me Slim.
Aww.
Everybody calls me Slim. So Slim and Steve are interchangeable for me.
I love it. Well, and you've got your own band, right? I'm sure you get told that all the time. I love your band, Steve Miller.
I do get tons of that.
I know I'm not the first.
Awesome. Yeah.
Okay, so you brought some of the charts up.
Yes, what I'm showing you here is the S&P 500. I know that most people that are looking at this are not familiar with this style of analysis. On the left here, I have a weekly chart. On the right here, I have a daily chart of SPX. That's the S&P 500 cash. And I'm going to bring up the weekly chart here and blow that up. And what I want you to see are on the bottom, these half moons or semicircles you're looking at are called cycle brackets. They're a drawing tool. Now, cycle analysis looks at money flows. So essentially, it's a visual way to see the movement in and out of the market, or like a heartbeat of the market. And as money flows in and out of the market in these waves, when a market is moving upward and in a bullish trend, as you see here, which is the bull market that we're in right now, each of these cycles has a higher peak and a higher bottom. That essentially makes the uptrend that you're in. When you're in a bull market, the rising phase is longer than the declining phase, or the rising phase finishes and peaks on the right, somewhere on the right side of each of the cycles, and then it leaves less time to decline in that normal rhythmic motion of the market than in a market that peaks very early in the cycle, and then it has a lot of time to fall. In this case, you can see right over here that you have a long rally that occurred here from the bottom that we made back here in October of 23 through this rally right over here in these last couple of weeks, and then it turned down. So essentially what we had been looking for was a decline in the stock market right over here to take you down somewhere between 5.3% and 8% in this corrective phase before moving to the upside again. So this is what cycle analysis looks like. And we look at multiple time frame analysis using the daily chart and the weekly chart, or you can use any combinations of time frames to do that analysis. So if I look here on the daily chart right over here, you can see these upward cycles that each one was higher than it began, and each one peaked at a higher level. And now something different happened. This one made a higher high, but then broke that key low. And we've been talking about that level, which is at 5104.35, that once that broke that level, which we expected, then we would be in this corrective phase here on the weekly chart. So we're in a correction right now of what we believe and have believed is an ongoing cyclical bull market. I say that versus a secular bear market because I have a different opinion about the secular conditions of the market. But this looks to us like we're going to correct. And this, what you see here is our coming projection, which says that once you make a little bit of a bottom one in here, when it gets oversold, it's likely to try one more rally, and then this declining energy right over here on the daily will join with this one on the weekly, and you have what is the greatest risk. And we call that, as you can see right over here, the period of risk, which was really through March through May or early June, where we thought there was going to be a large decline. So this decline in the stock market is very much online. It is, we thought, and you can see our projection right over here, that we thought it would fall 350 to 500 points in the S&P 500. And that's still what we're thinking. It could be worse because when there's a capitulation, you could get much deeper. So our targets have been, at best case, and I think too high is about 49.90. This is much more likely, which would be about an 8% decline, 48.20 or so, with a potential down over here at about under 4,700 in this next, we'll call it maybe 5 weeks or so, in this period of risk that we're in the market. So this is a pretty natural decline. This line you see right over here is our momentum indicator on the weekly chart. It's called the reversal scout, and you can see it turned up right over here and it confirmed this bottom in this cycle. It turned down over here and confirmed that a peak in that cycle. And also what we have here is the slim ribbon, which is a good support and good sense of momentum. And that now has turned down and negative as of today. So it had been positive for many, many months. And you can see on the bottom here, it gives you the momentum conditions. And now it has turned negative. Okay. So that is my opinion on the stock market.
There's a lot to this, the cycle analysis. That's what you were showing on those charts. Correct?
Yes.
Okay.
Cycle analysis. There's a lot to it.
Yeah. Can you real quickly just name the different factors that go into cycle analysis?
Okay, so the general aspects of cycle analysis are measuring the distances from low to low. The common cycle, just like you would see on an electric oscillator, has a rhythm in it. And you can see I'm going way back over here, and there is a natural rhythm in this market. So we want to measure the distances between those and get an average. Right now, if I highlight this, you can see the average period is 28 bars or 28 weeks. And there's a beautiful rhythm of that average of 28 weeks. There's a range generally of when that will have a trough, and we put those light blue lines that you see right in there is about the range of time. So cycle analysis is one of the few styles of analysis that projects not only in price, but in time. We also use retracement levels and the key cycle support levels and resistance levels to be able to project this and to be able to get a very important sense of trend. And we add into that our proprietary momentum indicators, which are the reversal scout and the slim ribbon. So we put all of those things together to get a sum of the evidence analysis using multiple time frames.
And I know you've been doing this for years, for decades. So you also teach this to other traders as well. If you don't mind, I'd love for you to quickly pull up a couple other charts. Gold and Bitcoin, doesn't have to be in that order. Those are some that a lot of our viewers follow. And I would just love to see what you're projecting the future is for those, each of those. the near
So
future,
in the
of course.
gold market, we had been projecting a large rally. And I've been telling my members for the last year and a half or so that we were in a consolidation, and I had been accumulating a lot of gold and feeling like, I wanted to hold on to the physical because I thought it may be too hard to trade. And then when I saw the breakout, I was talking about, well, one of the best trades is SILJ because of the leverage condition. The leverage miners, the junior miners, I thought would do great. That's DDX, JDXJ, or SILJ for silver.
And I think
So
you
here was the
still have
breakout
gold
right
up
over
right
here.
now. Is that right?
This is
I'm
gold,
sorry,
yes.
S&P, it looked like. Put that
You
up
see
one more
gold?
time. No, I don't think we had gold up. But I don't
Oh,
have my
wow.
glasses on.
Somehow it got stuck then because I am still, let me see if I'm still sharing. I am sharing.
Okay, that's up there right now. That's what we're
Is
seeing.
gold
It's
there
gold
now?
now. It is there now, yes.
Okay. All right. So anyway, we had this consolidation right over here. You could see these minor cycles right in here, the small ones, and how they almost line up perfectly on these lows. And then this one right over here was this one here. And now when you have an upside energy pushing up, and that's dominant on the big cycle, and a small one pushing down, that's how you build these kind of pennants and triangles. That's how these form, and that's why they're most often bullish, because once the shorter term conditions let go and they begin rising again, they join this bigger one right over here, and you get these upside moves. I actually was projecting that we would get up to these levels later in the year. I didn't know that we would have this giant kind of upside spike that we've had. And now we're into this corrective period right over here, where it's likely that that shooting star right over there that you can see, and I'm just going to tighten this up right over here. There's a shooting star that's likely the peak for now, and you get into a corrective phase that probably goes out into May. And when I look at the daily chart, you can see these beautiful, those yellow zones are where those corrective periods are. So we're expecting a pullback there. And we might have seen it already in this one. So you'd get a rally and then probably test these highs and then correct again further out. The date of that correction is June 8th. In other words, when that next low is due. So if I come over here to the weekly, you could see this projects out to around the early part of June. So there's a synchronicity between the daily chart and the weekly chart. And what it says is that we're probably going to be in a pretty good shop right now in the gold market. And if that end up to be a corrective phase, we'll look for a pullback to somewhere in the June timeframe. On 2300, potentially down as low here as about maybe 2210, 2220, and then getting into that next rising phase, which could take you well up over 2500, 2580 is that number right up over there on the gold market. So gold, super bullish. We've been very positive on it, and that really has worked out well. We believe we've entered into a corrective period. I'm going to put up silver, so just so that you can see really quickly.
It's fascinating too, because I feel like you are really able to pinpoint timing.
Yeah, and that's the thing about cycle analysis. So this is really cool. This is the silver chart, weekly chart. And what I've done in here is I've overlaid that gold analysis that I have just showed you. So there's those minor gold cycles right there. And this is where the corrections are in gold, these yellow areas on the bottom. And you can see right over here, there's a correction due in gold right over here. A minor
okay, gotta love
correction
technology.
Right
Okay, now we see the charts. For some reason, there's a little delay, of course, but we do see it now.
Oh, I'm sorry to see that. Sorry to hear that. Well, right now you should see the silver weekly chart.
Yes, we do. And now I see the yellow that you were just pointing out.
The yellow on the bottom is showing you those corrective areas.
Okay.
Where the gold corrects, and this is a silver chart. So you can see silver correcting right with gold into those time frames. And that points to that correction in gold that I just showed you, and silver correcting at the same time. So that means that we're probably going to correct down into the June timeframe in silver also.
Okay.
But then moving up, and that's probably going to take you up to the $31 area the next time it does move to the upside out into the July-August timeframe.
Okay, well, we only have a little bit of time left. I do want to have you pull up Bitcoin. We do have a lot of viewers that invest in crypto, and there's always something going on with Bitcoin. And there's a lot of talk right now, of course, with the halving coming up. I believe, gosh, at the end of this week.
So I know there's a lag that you're getting right now. So I have the Bitcoin chart up, but you'll have to tell me when you see it.
Let me see. Yeah, it's not up just yet.
Okay. Sometimes technology does this to us,
I know.
where we get a lag and
it's moving as fast as some of the charts move, right?
Yeah, it's hard to figure out why they do something like that.
Oh, what a bummer. So, yeah, it's not coming up. But do you invest yourself in crypto or Bitcoin?
That's probably not a question you wanted to ask me. Because,
okay. We don't have enough time for that answer, right? I do see it up right now. Your chart is
Yeah, I'm one of those crypto skeptics. So
well, you're not alone. There are many.
A lot of reasons why. However, I'm also an analyst and a technical analyst. So when my work turns positive, we're positive. It doesn't matter what I feel in my gut or what I believe.
Yeah.
So this is the Bitcoin chart, and you can see the beauty of the rhythms that are in there. And you can see also that we expected a pullback in here. And our projections have it pulling back most likely to under 5,900, but then probably getting as low as 5,300 over this next month. I think there'll probably be a lag to get over to the daily chart. Can you see the daily chart now?
I don't believe so.
Okay.
There is a delay, but it is fascinating to hear, you know, what you've come up with. Your analysis is so similar to the other traders that I work with. And again, everybody just has a different way of analyzing the charts, but sometimes you still come up with the same, you know, answer and outcome, and outlook. Right. So
there is, because we're having a little technical issue I won't put up, but there's a monthly cyclical pattern that calls for that decline. And I'm looking at that chart right now, and every one of the monthly declines has been between 39% and 79% over the last about 7 years. And so, you know, the best case I could project was down to about 5,300 based on what those average declines are. But then when you look at this chart, you can see that we're going to get into a rising phase starting in June, maybe in May, late May and June. And that's probably, if we do get that pullback into the 50-something thousands, it's probably going to move back up and test those highs again. But I really don't believe Bitcoin's going to get much higher than this at all.
Really? Okay, interesting. Well, I want to ask a little bit about your background. Your website is fascinating. It's got a ton of really great information. I do want to bring up a few points because you have it listed on your website, some of your best and worst days and years and trades and so forth. Your best single day trade, you bought 3,000 shares of Bally's. This was resulting in a profit of over $14,000 in 7 minutes. Your worst single day trade was you were long 250 calls in Avon, and you ended up having to sell them for a half point lower for over a $22,000 loss in just a few minutes. In November.
There's more to that story really quickly.
I know.
And that is
there is a lot more to all of this.
I wanted to get out sooner, but the broker bought them instead of selling them. So I had twice as many to get rid of.
Oh, got it. Okay.
It was horrible.
Well, yeah, I can imagine. In '78, you made $321,000 for your best day. The market was in a free fall. Then the very next day, you lost $340,000. But you've had several years in which you've earned well over $1 million. You've had some really great trades, some really great days. Talk about the mistakes that you've made over the years and how you've learned from those, what you're teaching others to avoid.
Well, I think the biggest lesson, and it's a lesson that
turn your camera on when you get a chance.
Oh, sure.
We want to see you again. There you are.
Okay. I think that the biggest lesson for me, and it took a lot of hard work, personal growth work, was why I had swings like you just shared with the audience. And it was because I needed a certain amount of, I needed to be seen. I needed a certain reputation. I needed to have those big days so that I had what I perceived as value in my own life. So I was giving trading that role, make me feel good, give me value. And that essentially was a way towards disaster because you can't give trading a role to answer anything in your life at all. It just has to be about trading, following your plan. And then when I finally, did enough of my own personal growth work to understand what need I was trying to solve with trading, then I matured in a way that I could approach trading in a way that was much more like a business than like a way to solve any problems in my life. And that made a huge difference for me. It took a lot of years to learn that. So trading cannot be the answer to problems in your life. That's probably the biggest lesson.
You got to have the right mindset, right? That's what I've been
Mhm.
hearing from a lot of people. Okay, what are the keys to being a successful trader? Name a few of them, please.
Well, first of all, give yourself enough time and enough capital to make mistakes. It's mind-boggling to me that some people will enter into a career. They want to become an attorney. They'll spend $200,000 on a college career. They want to be a doctor or a specialist. They'll spend 300 or 400 or 500,000. But then when they go in for a trading career, they try to do it with $5,000 and don't give themselves the chance to really learn. You have to pay a tuition. You have to have enough money in behind you to pay all of your bills and survive, so you're not asking trading to do that, and you have to be able to make enough mistakes enough times. You will not learn by doing it right. You have to learn by doing it wrong, and there is a cost to that. Pay the tuition, put the money up. Don't get in it unless you really have the ability to do that. Don't make trading a hobby. It's not a hobby. It will only come apart if you try to approach it that way.
Steve, thank you so much for your time. Where can our viewers go to get more information on you and your services?
Yes, just go to AskSlim.com and you'll be able to see our website. And if you have any questions, write to team at AskSlim.com and they'll answer that for you. And if you want to start, just get a taste for what we do, just sign up for our free daily S&P analysis, our Snapshot Lite. It's right on our homepage. Put your name in there, an email address, and subscribe, and you'll get free information with some of the charts that I just showed you every single day.
50 years, over 50 years of experience. So there's a lot of great information on that website, askslim.com. Thank you so much, Steve. We appreciate your time.
Glad to be here. Sure.
Well, thank you for watching Trading the Close. We'll see you back here tomorrow. Make it a great rest of the day.